Thanks for listening to The Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner, host here on The Professional Edge for going on 5 years. What we're talking about is junk drawer resolutions. And how does that apply to financial planning, estate planning, tax planning? Well, we know we all have a junk drawer and there's a various sundry of items in there. We open that junk drawer. It is completely packed. We've always wanted to get and go through that and clean out some stuff. But lo and behold, we never seem to take anything out of it. We always put stuff in it. And therefore, we have to sort of smash things around in order to get that drawer closed. But we know that the flashlight's in there, the magic screwdriver, even the wrench. Man, we even have tape. We have nuts, bolts. We have everything in that junk drawer. So how does this apply to your financial estate plan, tax plan? Well, you have a lot of junk. And we've talked about your estate planning. You may have done that 15 years ago. Well, it's part of that junk drawer. You just got it done. You threw it in there and you've never looked at it, never brought it out. So it's time to get that updated. One place to start and look at that is to go to emcadvisors.com. That is Echo Mary Charlie Advisors.com. And on the right-hand side is the Ultimate Estate Plan Guide. Select that. We'll send it out. That gets you thinking in the right direction for updating your estate plan. With that, then we also look at seeing if there's any asset protection, because we're seeing individuals that live a lot longer, but unfortunately or fortunately, they're getting remarried, and then we have a messed up estate plan because the kids on that first marriage are getting disinherited. So if that's of concern to you, you look at your spouse right now. You may be driving in the car, maybe listening to the show on your headphones on a podcast. You can look at your spouse right now and you say, okay, I trust them. Well, that's fine. But what about the new spouse? What about the guy on the other side of the pool or in front of you where you're sitting or where you're going to go? Well, that is the new spouse that's going to come into play, and I'm not sure you know them. You don't know them because you're not going to be here. So what are they going to actually do with those proceeds? Are they going to protect your children? Well, more than likely not. So again, we're going to clean that up as part of your junk drawer of your estate planning. Number two, we need to look at your investment portfolio. That's part of your junk drawer because you may have had a 401k. You may have had the custodian of the 401k change. They did some, quote, drag over and sort of put you in these selections of funds that, quote, matched or mirrored what you were in, and you got busy, didn't look at it, and you said, I'm going to get to it later. Just like cleaning out your junk drawer. You're going to get to it later. Well, it's time to get to it now and clean that out because, A, some of those funds might not coincide and be in your best interest going forward financially. So again, that's part of that junk drawer. Let's clean that out. Or if you have old 401ks at prior employers, you put it in a target date fund or whatever fund, you don't even remember, you haven't looked at those statements in 4 or 5, 6 years. It's been on autopilot. You've been, quote, busy at your new job. And you may have old IRA accounts. It's amazing how many people have these IRAs when the maximum limit was $2,000. Yeah, I'm dating myself, but that was a max contribution. And a lot of people, the tax preparer was helping individuals put $2,000 in these IRA accounts to help them tax-wise. They could code the return, save some tax money, and people just cut checks for $2,000 and put it in there, and they lost track of it. They don't know what's going on in those accounts. They have various IRA accounts. No real plan on what's going forward. So again, that's part of that junk drawer. The nuts and bolts that are in there, those are these various investment accounts. You may have a substantial amount of cash inside your checking account. You may have had an inheritance or somebody gave you a gift and things are accumulating and you're just going to get to it. Well, that's part of the junk drawer. There's a various sundry of items that's in there. You sort of push it down, close the drawer and forget about it and continue on with life. So if that's you, give our office a call at 877-654-9798. That number again, 877-654-9798. And let's sit down and have a candid conversation. First meeting's complimentary, even the second or third, depending on what we're trying to accomplish, and see if we can actually clean out that junk drawer that you have, financial or estate or even tax. So a lot of individuals are sort of shell-shocked because of the 2022 performance in the stock market. Excuse me. And we're going to look at that and just basically say, okay, yes, the S&P 500 index declined by 19% in 2022, pretty volatile. And then we look at the NASDAQ, that was down by 33%. Technology used to be the safe haven, and you say, okay, well, I'm all right. I had 60% in bonds. Well, the bond sector got crushed because we were in a rising rate environment, the quickest in history for the Fed actions. And we went from basically a zero rate to 4.25%, 4.5% right now, and I don't think Chairman Powell is done yet. So we had this raising rate environment, and that affected the bond portfolio. So you, being a listener here on the Professional Edge, you say, hey, I'm in that 60-40 portfolio, 60% equities, 40% bonds, I'm okay. Well, probably not. You had a negative return in 2023 or 2022. So what adjustments do you need to make if the Fed's not done raising rates? Run through that scenario. Or if the Fed is done, what sectors are going to be affected by this new cost of capital? One sector which comes to mind is housing. Well, the interest rate on a 30-year mortgage is more than doubled from where it was before the Fed started raising rates. So the cost of housing is going to go up. Yes, it's going to temper demand because we all remember in 2022 that at the start of the year, people are getting, $50,000, $60,000 over list price for their home. Well, that is now the way of the dodo bird. We're not hearing any of that. We're hearing that homes are actually sitting on the market for a little bit of time because the cost of that capital is more expensive. It's doubled on a house payment for a 30-year mortgage. So that's going to temper that. So depending on what REIT you might be in or commercial real estate, that's the other side of things. We know that companies, given the effect of COVID, went to Zoom and work from home. So what is the vacancy rate on commercial REITs and how is that going to affect you? You might be in some commercial REITs and one might be retail. Well, we all know that a lot of our retail is now going online, so we don't need all these stores and we don't need all these strip centers and we don't need all these malls. So the vacancy rate is going up on those and the cash flow is not going to be available to you, the investor inside those REITs. So again, it's that junk drawer. There is a sundry of items in there, and when is the time to take a look at what is in those portfolios? Well, now's the best time. It's the beginning of 2023. Reset the clock. Look to see what you need to go forward. And the best place to do that, an incentive here on the Professional Edge, is what we have put together as the bundle. It is a combination of getting your estate plan done, getting your portfolio review, and doing your income tax planning. You may say, wait a minute, I have a great bookkeeper. I've been with this person for 20 years. They prepared my taxes. I've never been audited. Well, that's great. Continue with your bookkeeper, but let's take a look and see if there's any way to reduce your income taxes. Being a tax attorney and a CPA, we can look at it and make sure that things are copacetic. Or at least give you suggestions. Here's what you might want to plan on doing if you are thinking about disposing of your rental property, or your second home. Here's the way to maybe structure that, and it just give you food for thought. That's tax planning, not when you're putting your documents together come April 15th and putting it together and say, wow, how can I reduce my taxes? Well, the cat's out of the bag at that point. So for 2023 tax planning, let's start today. So again, the best way to get started, the value of what we're offering in the bundle, if you did it basically a la carte, would be over $10,000. As the inflation buster, yes, we're all trying to save money. We've reduced that core offering down to $3,000. So you get your estate plan done, you get your financial portfolio reviewed, and you get your income tax planning. And here's how confident in the value in which we are offering. If at the end of this, I'm going to look you in the eye and I'm going to say, are you okay with the value in which you received? I guarantee it. I look at you and say, are you okay? Did you get more than what you paid for? Are you happy with it? And if you say, no, I'm completely dissatisfied, I can't believe this happened, I got my estate plan done, I got my portfolio reviewed, I've reduced my taxes by thousands of dollars per year, no, I'm completely dissatisfied, I'll hand you your money back. It's that confident in what we add to you as a listener here on the Professional Edge. And again, one way to get information on that is emcthebundle.com. That is Echo Mary Charlie, thebundle.com. Or the other way is just give our office a call at 877-654-9798. That number again, 877-654-9798. When you ask for it, say, hey, I want to sit down and learn a little bit more about the bundle, what it is, what's going on. We'll send you some information and we will coordinate that here at the Cunningham Center or the Magic of Technology, a Zoom meeting. It's that simple. It's an incentive for you to get your junk drawer cleaned out and put in place for 2023. Make it a very good year for you and your family to do your financial junk drawer, your estate planning junk drawer, and your tax junk drawer. We all know that they're all in one place. So let's get it coordinated and move forward that way. Again, that is EMC Echo Mary Charlie thebundle.com, Echo Mary Charlie thebundle.com, or the office at 877-654-9798. That number again, 877-654-9798. So let's look at the final junk drawer here real quick, is your taxes. A lot of individuals are taking the standard deduction. There's been a change in the IRA distributions for required minimum distributions. So are you doing the best thing you can do, the most tax efficient way of A, giving to charity, that's number one, or B, on actually reducing your taxable income by having what a lot of people refer to as a side job, your own personal business. So with that, we would put up Schedule C and take some of these personal expenses, if they're valid business expenses, move those over to Schedule C. And yes, if you lose a little bit of money in the first year getting your business started, that's fine. You might be making things out of metal, and you need a bender, you need a lathe, and you need a welder. So those are business expenses. So we can deduct those, and if that drives you to a negative for the first year, let's say you lose $5,000, and we take that $5,000 against your W-2 earnings, and therefore at the 30% bracket, round numbers, then you save $1,500 in tax. So if that's of one importance to you, tax planning, do take advantage of emcthebundle.com. That is Echo Mary Charlie thebundle.com. Or give out the office a call at 877-654-9798. That number again, 877-654-9798. I appreciate you listening in to the Professional Edge. And again, the junk drawer and resolutions, and hope for a great 2023. Thanks for listening.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Sean Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Sean Todd help you implement an effective estate plan. Call 877-654-9798 today. As a tax attorney CPA for over 15 years, Sean Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. Sean has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net.